I'm done spending an obscene amount of money on takeout every week.
Yo, yo, yo. Good morning, good morning. Let me read the chat here real quick. Igor, Luke, Oki, Mantis, Cloud, Jason, By the Dip, Sarah, Marker Whisper, what's up, what's up? Good morning. How's everybody doing? Musa, good morning, good to see you in here. Appreciate you. You guys can like the video. TOK, what's up? Game over. Akbar, good morning, good to see you. Of course, brother. Yeah, if you can just like the video, I appreciate it. We're only about 18 likes, I mean, just helps get it out into the YouTube algorithm. I'm doing very good, Musa. Accidental, what's up? Hope you're doing well, brother. Zaru, good morning, TH. What's up? Good to see you. Robbie, what's up? Good to see you. How's the mic audio? Good, clear. Yep, news at 10, so you guys know the drill. Who's been with me, we are going to be waiting for that one. We'll go over a few things in the meantime. If you can, even if you think you have a small following, whatever it may be, if you can share the video, I really would appreciate it. It would mean a lot. Because anything that we can get. Let's see what's in the chat here. I'm sorry, I don't know how to pronounce your name. Matifa, what's up? Joshua, good to see you in here. What's up? Guy Jones, good to see you. Some familiar names. You guys can see the screen pretty clearly, yeah. Everything's looking good, sounding good. Siri, what's up? Alright, very good. Remember, I don't want to harp on this, but we only got 36 likes. We got 80 guys in here. Let's bump those numbers up. Tuna, what up? Yeah, I'm back. I'm back, baby. With even better things this year. When we get to 50 likes, I'll start talking about price. Like the damn video. Take profit trader. I've heard they're pretty good. FXMA, been here for 1 to 2 years, finally saying hello. Well, hello to you. Good to see you in here. Three more likes, people. 3. That's it. We'll start it. No trades Thursday. I just found out market closed because of Carter. You may be correct on that. I mean, there we go. We got 51 likes. Appreciate all of you. Pulling tooths and nails out here. All right. Chris, thank you. Good to see you too. Robbie, yeah, man. I would just, no prop firm's ever guaranteed. I get the question all the time. No prop firm's ever guaranteed. I've always recommended to move to your own personal money. Now, of course, not everybody's blessed or fortunate to do so. So just grind away the accounts that you can and the prop firms that you trust and do your due diligence, and then get your payouts and move into a live account. That's the best recommendation I can give you. But let's go into the daily time frame here, and let's go into some higher time frame things. If you watched the daily log last night, and I know most of you who are here are people who have watched me for a while, and but when we start moving into probably bigger numbers and things like that, these are things, even if you want to help other people within the chat, recommend the daily logs. I think those are the most important things. The live streams are good, but to me, if you combine the live streams, you combine the daily logs, you combine even looking at the posts that I'll be posting on Twitter as far as studying, and then even Saturdays with psychology, those things right there are really the four things that you would need for a complete mentorship in my eyes. I mean, to me, you need a whole year's worth of calendar. But definitely do not sleep on the daily logs. Those are where you're going to find the most learning. Again, I know most of you who've been in here probably were watching them, and I don't expect you to watch them anymore. If you progressed and you advanced, then you don't need to. But that for me is the biggest thing. I think a lot of people sleep on them. So let's go into the higher time frames here. We have a news event driver today. So what does that mean? Well, if there's a news event driver that's ahead of me personally, this is my rules. This doesn't really come from anybody else. I'm not going to trade price until that news event driver comes out. And the reason for that is because I've found myself plenty of times where I get tripped up before the news event driver, and it saves me from a lot of headache. If I just wait for the news event driver to come, I don't have any fear missing out on any moves that's going to happen during the news event driver. I'd rather just wait for it and find my pound of flesh after that. So that's always been a rule for me. It doesn't really matter what the news event driver is. There's very rare instances where I'll trade before a news event driver, if anything. I mean, that's a very low percentage. So it's served me very well. To me, it's a fantastic rule to have. It's just something that I've personally have seen within my own trading that protects me and really, really helps me. So if that's for you, then by all means. If that's not for you, I'm not stating that you have to do that, but that's something that I've found success with. So again, we're all personalized traders, and we all find our own footing in the different styles. And for me, that's the best thing to do. So today we'll be waiting for that. It's right around I think 10 o'clock. So let's look at the higher time frame here. I want to keep watch on this. I think it's very important. The monthly doesn't give me a whole lot of information, but the weekly does, where we're still within this buy side imbalance and still within this order block here. So we've dropped down into it multiple weeks now. We could potentially see a run away from this where we see higher prices. Now, if I had to fight the idea, an intermarket relationship sometimes is a difficult thing to work with, and we'll see how we trade. I'm watching dollar index because we're inside of the weekly and monthly sell side imbalance, and we could see a drop away from that. So if we start to see a drop away from that in dollar index, that would mean to me that we'd start seeing higher prices in NQ. But if dollar index continuously presses higher, and not just dollar index, we have foreign exchange, we have bonds, we have yields. If those things follow suit in the relationships, then I would probably still be looking for lower prices in NQ. We'll just see. If you go over to bonds and yields, bonds are still dropping lower. So if we want to see lower prices in NQ, that's a good sign. Yields, we're still seeing them press higher as well. And I'd like to see if dollar index would really like to join that, really press higher as well. Foreign exchange, USD correlated, we're still dropping lower in here, even on a weekly chart, a daily chart. We're still seeing these drops lower. So I'm interested to see what NQ and ES and all that ends up being like. But when I combine that, and even like the S&P at the highs here that we talked about on a weekly forecast, and combining like a daily time frame where I'm looking at how, even though on the weekly we're still technically bullish, right? This is to me where I'm trying to predict the switch in order flow before it really happens on a higher time frame. That can be difficult at times, and that's why you'll see a bunch of different opinions within the chat or within comments, or even within yourself, because it's very two-sided. Because on the weekly chart, the order flow is still, to me, bullish, but I'm looking at the daily chart and combining things that we just looked at and saying, I'm potentially looking at the idea of price switching. I'm looking at that and saying, okay, well, on the daily chart, we've broken down here. We made a swing high. We came into this sell side imbalance, the order block away from this premium. We dropped lower. We made a new low, and now we're returning back up inside of this premium from this dealing range high to this low. So it's not just this, it's the things that I just combined. And I would potentially be looking at the idea of price collapsing lower, right, beneath this buy side imbalance and collapsing into the mean threshold or beneath this order block here and creating basically an order flow on the weekly chart that's bearish. Once you see that, right, this is very important. If you see that, where the weekly time frame is, you can clearly see that the order flow is bearish, meaning that you're breaking buy side imbalances or buy side PD rays. You're seeing that collapse lower, and it's respecting bearish. You see the daily chart in sync. You see the 4 hour, the 1 hour. All those start to become in sync. That is, to me, a really good narrative. And then you have intermarket relationships to help you. You have SMT to help you. All of those things are a really good higher time frame narrative to trust, right? But right now, I'm trying to predict that that's going to happen before it will. Now, does that mean it's going to happen? No, but it could, right? So we'll see what happens with this sell side imbalance here. If we close above this and we're not respecting it, then I'm not going to short NQ. I think people get confused with that at times. It's like, well, you're by a short, you know, you're wrong, you're stupid. No, I'm just leaning on that idea. And if it ends up being wrong and I didn't take a trade on it, that doesn't mean anything to me. It just means that I was biased on one way, I sat on that idea, and it didn't come into fruition. If we close above this sell side imbalance, then I would be looking at the idea of potentially looking for higher prices and looking for this high to be traded to. Why? Because that's the nearest buy side liquidity pool that price could trade into, or at least draw towards. So if you go into the 4 hour time frame again, we've drawn up into this premium, same thing as the daily chart. We've drawn up into that sell side imbalance. And I would like to see if we'd see a move lower away from it. Same thing with the hourly chart, this imbalance here. We've drawn up into that. We've completely closed it in yesterday. So we'll go ahead and just annotate that. And we'll see if there's a movement away from this today. Again, the news event driver is going to be a huge catalyst in what price really ends up doing and how I react to the market. So hopefully that's clear. If we start to do anything differently or we move higher, it's not showing any willingness to move lower, then I'm not going to be looking to short it. And I'd have to see a clear model to do so. If you just joined, I appreciate it if you'd like the video. We're only at 62 likes, so about 130 in here. So in these lower time frames, where would I be looking at? Well, look at this liquidity pool from yesterday. That's resting right here. The sell side liquidity that's resting right here is something that catches my eye immediately. Things should stick out to you like a sore thumb. They should stick out to you like, okay, well, if I'm really trying to look hard at the chart and I'm really trying to find a liquidity pool, then it may not be really that easy. As soon as I come to the chart, if I can immediately look at something with my experience and the knowledge that I have from ICT, and it just sticks out, that's a pretty good spot to look at. When I look at the chart, these lows stick out to me immediately, right? Even if I was biased long, these would need to be taken before I would even consider longing it. But I'm biased overall short, so this is an overall good confluence, a good area for price to draw into. Beneath that, we have, this is a previous new week opening gap here, there, and then this is the current new week opening gap. And underneath the current new week opening gap, we also have some relative equal lows, which are resting right here. So I have a few objectives, few downside things that I could look at. Overnight, or at least going into the morning, we came up and we took this buy side liquidity pool that's resting right here. I'm going to remove these new week opening gaps. I really only want the current. You can leave them on. I just don't like my chart too cluttered. So oh, that's new day opening gap. My bad. There we go. Now, let's go into regular trading hours, which we'll switch over to that. You can see some annotations from yesterday still there. We don't really have a opening range gap from today, but what do we have from yesterday? We could still utilize opening range gaps or RTH gaps from the previous day. So this is yesterday's opening range gap, and we only filled in about, I'd say about 40% of it. Right, so this is still in the works, and I'll label this opening range gap but it is an RTH gap, regular trading hours. But opening range gap, same thing. And that's where we'll switch back over to electronic trading. And you can see that the opening range gap is resting here. And where's that in confluence? Well, that's in confluence with the idea of potentially running for the relative equal lows, which are resting down here. So you'd be aiming for 21,642, looking for the opening range gap, 50% to be traded to, potentially the entirety of it to be traded to. But since the liquidity is resting right around the 50% of the opening range gap, that's basically the highest probability draw. Now, before, in younger years, something like today, right? If there was no news event driver, and I'm seeing this movement off of open, that I would potentially be looking to trade it, potentially, because I could see how there's a high probability that it may want to draw down into this. But since there's a news event driver, and my rules tell me, do not trade before a news event driver. Why? Because I've seen with experience that my setups tend to not work. Even if I have a good draw on liquidity, it tends to not end up working. And it protects me from potential stupid losses and stupid mistakes. So even though if it traded to the things that I'm outlining before the news event driver, would I feel guilt? Would I feel like I'm stupid or I should change the rules? No, because I've seen with time and experience that I trust that rule set, and if there's an exception to it, then it is what it is. So this all goes back to having rules and standards for yourself. If you can't accept that, then that's just part of trading, where you're going to have rules that you have outlined for yourself. And you can't make exceptions to them. You can't say, well, okay, well, just today I'm just going to trade this, because today seems really, really good. No. You say, look, I have this rule outlined for myself. I have these things outlined for myself, so I'm just going to stick with it, and I'm going to trust it and have discipline. If you can't do that, then you're going to massively fail in all areas in your trading because you can't follow one simple rule. My simple rule, this is mine, I'm not trading before the news event driver. So if I can't even follow that, how the hell am I going to follow anything else? That to me is just basic discipline. It's basic discipline, and it's also emotional discipline. And when you go into emotional discipline, as far as this emotion of fear missing out, to me, I have the mindset that solves that issue, which is there's an abundance of opportunities, right? Also, with fear missing out, it's also an overconfidence issue because you 100% believe that, price is definitely going to trade to this level. It's 100% going to do it. I see my model's going to 100% do it. But what do your rules say? That's what's most important. My rules say don't trade before the news event driver. So I trust that more than I trust the analysis. How can you guys sit still while the market is moving? That's what I'm struggling with. That's exactly what I'm talking about, Luke, is it's greed and fear missing out together. Greed is an overconfidence issue. And same with really fear missing out at times. They're both really linked to overconfidence. It goes back to the idea of you think you know that price is 100% going to move to this level. It also can go into self-criticism where if you sit out of a move that you knew was going to happen, right? And this is hindsight thinking, like price is, it's going to go to this level. And it goes to that level and it plays out perfectly. You're also, before that even happens, you're scared of the self-criticism that you may give yourself. If you're super self-critical, like I was, it's still at times, but you have to be on watch of that. If you're super self-critical, you're almost scared of the self-criticism you're going to give yourself for not entering into that trade. So you just press the button to potentially avoid that future self-criticism for yourself. So you have to watch these things. Again, all of this is from the mental game of trading. I haven't talked about this for a while inside of the private group because most of them really probably understand it. But these are the things that really, really are playing on in your mind and not playing out in these candlesticks. Game over. If there's a decoupled market, right, that to me is I just look at a decoupled market and I teach if there's a decoupled market that's a low probability environment for me personally. Until they get into sync with one another, then I'm not touching it, right? If ES is not doing what NQ is doing or vice versa, then to me, that's a low probability environment. That's something that I will not be, even if my model's there, even if I have a bias, even if I have a framework that's valid, I will not execute on it because I see that those two are decoupled away from each other, meaning that they're not moving in the same format, and I won't touch it. So that's very important. Like right now, how ES was failing to really run lower and NQ made a lower low. It made an SMT at the lows there. So if you look at ES, I'm going to have to go to the actual contract. If you look at these lows from overnight, let's just say, or even before the open, 830, right? 830 is here on ES. ES never made the lower low, while NQ made the lower low. And that's a SMT between the two. Giuliano, no, it's not. Joshua, go ahead and send that message again. My Nightbot can be a little touchy at times. I don't know what you sent, but apologies. The first FEG is going to be technically here. So 922, yes, there. And I'm not worried about any of this price action that's going on. I'm waiting for that news event driver. It solves all these emotions, all this fear of, well, what is price going to do? What is it doing? It just solves all of that anxiety, all of that worry before a news event driver. I would rather save my mental capital and just chill out and wait for that news event driver, right? Some people like that thrill. Some people like the idea of sitting, before a news event driver and just saying, oh, well, I'm just going to wait and see what it does. I'm going to execute on something and hopefully it plays out and I'm able to pass this challenge account. That's all up to you. That's your personality. But for me, I'm over that. I don't need to be doing all of that. I know there's an abundance of models and things for me. So if I wait for the news event driver to play out, I'm sure there's going to be something after. And if there isn't, I'm sure the next day is going to provide something. It's not a big deal. If you're just tuning in, I appreciate if you like the video. About 74 likes. If we can get this to 100 likes, I'd really, really appreciate all of you. I'll give you a cookie. Maybe give you a trade idea that loses. My bad. Let's just annotate the left side of the chart just for purposes. Do I trade pre-market? No, I do not. Can you? Yes, of course. Is that me? No. I just don't like trading before the market opens. I've found success with just trading to the silver bullet and maybe in the PM session at times, but for the most part, I just stick to the silver bullet. I had coffee today. Miss it. So on the 1 minute chart, you have this inversion plus this inefficiency here after we've ran the sell side liquidity underneath this low. Now again, before news event driver, I don't trust anything that's going on. I don't trust models. I don't trust any PD raise, anything that's printing. I don't trust it because I don't know what's going to happen with the news event driver. I can't predict that. Much as as much knowledge as we have with ICT, you can't predict that. So I'd rather just wait and see what the market is giving us when the news event driver releases. On the 5 minute, we're coming up into the sell side imbalance here. We got about 10 minutes until the news event driver. So once that releases, that's when we'll look to engage if there is anything. If not, sit and be patient. This is something last year where on YouTube, a lot of people had the issue of me, and I've changed a little bit of my style where I didn't engage very much. And I think this is an issue I think a lot of live streamers have with trading because it puts pressure on people's shoulders of always trying to take a trade to entertain people. And I think this even goes into people's own trading without them live streaming or being in front of people. You're looking for entertainment, you're looking for fun, you're looking for to feel like you're doing something. And when you're trying to trade all the time and you're trying to press buttons, that doesn't equal work. That doesn't. A lot of trading is opposite of what we do in the real life. When it comes to actual jobs, it comes to sales or whatever it may be. The more work you put in, usually the output equals to it, or at least the outcome equals to it. And trading is completely opposite. The more work you do, the more trades you take. It doesn't always equal that. It rarely actually ever does. And I think with time and experience, especially if you're newer, less than a year in, you're going to have a lot of those emotions where, you want to be doing more. And it's almost very difficult to fight the feeling of trying to do less. But I think with pain and experience, you'll learn that it doesn't. Pain is the biggest, the best teacher in the world. It really, really is. I think a lot of us learn through pain. I learned through pain, and not just a little bit of pain. I mean, like a severe amount of pain, in order for me not to do dumb shit. So, it's why experience is the best teacher. Because if you can't learn through just simple basic rules and somebody telling you not to do something, then you have to learn through pain. And it's unfortunate, but it is the truth. If you guys could like the video, I'd appreciate it. If we can get to 200 viewers today, that'd be cool. We're gonna slowly keep creeping up every single day, taking over YouTube this year. I may stay on here a lot longer than I may do the whole damn year on here. I've had some ideas. Any giveaways with funded? Probably in the future. I'm still with them. I still love them. So I'll probably talk to some of the guys over there. Did I join Robbins? No, but I do believe I'm going to. I really do believe it. The reason I'm just debating whether or not how I want to do it, really. So we'll see. Hamed, thank you. Appreciate it. Market delivery efficiency. Took a pre-market long on NQ. Was in the trade for about 4 hours. As soon as I exited, break even. Yeah. this is for me why. I mean, I'm not stating that you can't do this, but let's just say, as far as a pre-market trade, trading before a news event driver that's ahead of the pre-market, even though it was 4 hours ago, the news event driver can cause a lot of difficulties, a lot of turmoil, and you're seeing that right now. Like, how difficult would this be to be trading this right now? It'd be very difficult, and it's the reason why I don't trade before a news event driver. It becomes very, very spotty price action. So. JH, I really appreciate it, my man. It means a lot. We can get 11 more likes. We can get 100 likes. I would appreciate it. If you ever see me looking like I'm jamming the music, it's because I am. You just don't hear it. Marco, what's up, brother? I don't remember me, but it's good to see you back. I'm a fun trader now. I got a couple payouts. Amazing, brother. I absolutely love to hear that, man. Honestly, I do. Congrats. When you put in the work, you keep grinding it through, you find success, man. That's awesome. How much coffee you drink? I'm only on 1 cup. I'm about to be on 2. Ravi, I really wonder. While streamers on podcasts hear people with big headphones. Yeah, you hear yourself in the mic. That's why I wear headphones, because it helps when I talk. I can hear myself kind of play back. James, is 10% a month considered a high return rate? What's a decent percentage? Yeah, I think 10%'s it's quite large. If you aim for, let's say, 2 to 4% a month, even 6%, that to me is a very high, realistic return of rate, especially as a newer student. As we're sitting here, I would like you to observe 2164 as we go into the news event driver, right? So observe this liquidity pool here and observe right around 40 to 50% of this opening range gap to see if we expand into that. Does that mean to take a trade right now? No. And I don't care even if price expanded into it during the news event driver, right? This is just something that I'm going to be looking at. Jafar, yeah. I have a very severe addiction to caffeine, so I run on caffeine and nicotine. Look at the sell side liquidity pool here at 21,696. I saw somebody's comment. Guy, CJ really helped me. Great discipline. Took 14 payouts last year at Top Step. I'm no longer with. Very good to hear, brother. Amazing. That's an amazing accomplishment, man. I mean, 14 is incredible. Congrats. Robbie, yeah, I mean, nothing's changed, brother. Caffeine and nicotine are the that is the solution to me. Yeah, JH, that's a good question. So, see how price turned, right? It's no longer respecting that order flow anymore. It's no longer respecting the bullish side. So, I'm no longer looking at that. I'm no longer going to utilize that. So, the news event driver just released. So, we've tagged out this low here. And we'll see if we want to get this run into 21,641. Now, with news event drivers, you know, as soon as it releases, I'm not looking, I'm not foaming at the mouth. I'm going to chill for a little bit, and I'm going to see what price is giving me, and see if things are panning out the way I want it to be. And if price moves directly to my targets and I wasn't a part of the move, then it is what it is. That's just that's how trading is. Again, abundance of opportunities. I'm not focused on a singular day or singular moment. I'm getting a Discord notification. So we have 21,641 delivered. Now, if you go back to the beginning of the live stream, what was the framework behind that? Why were we looking at that? Why were we looking at the opening range gap to be delivered to? Why were we not looking at higher prices? These things are important to remember and understand. Do I feel any type of way? Do I be like, damn, man, you know what? I knew where price was going, but I wasn't a part of it. My stupid rule told me not to trade before a news event driver, and guess what, man? I'm not a part of it. That, to me, it doesn't even cross my mind anymore. I just simply look at the idea of saying, cool, man, I was able to get an analysis right, and I trust my rules to protect me from stupid mistakes. I just observe it as a cool thing. Journal it and move on with it. But that was delivered basically perfectly, 50% of the opening range gap. Now, if we continuously keep carrying on today, where would I be looking at? Well, I'd be looking at the new week opening gap to be potentially delivered into as the next draw on liquidity. Why? Because new week opening gaps are a huge magnet for price. So the old new week opening gap and then the current new week opening gap and potentially the lows or the sell side underneath the new week opening gap. If we complete that, then I'd basically kind of be done with today. That's enough for me. At least what I would be expecting or anticipating from today. AK, very good to hear. And this is why we talk about narrative. This is why we talk about higher time frame. This is why we talk about intermarket relationships. Because if I'm only looking at these lower time frames, I don't think I mean, the sell side to me is very clear. Again, so first thing that I pointed out when I got on the live stream is that sticks out to me like a sore thumb. You're always looking at both sides. Which side is taken, which side is not taken. Which side is winning, which side is not winning. Well, when we look at it, what side did we already take? We already took the buy side liquidity, and we engineered all the sell side from yesterday. So even if you don't know how to use narrative, you don't know how to use higher time frame, you don't know how to use intermarket relationships, you don't know how to use SMT, you're still looking at simple, basic one-on-one ICT, which is liquidity. Where's the liquidity resting that's tapped? Where is it untapped? Well, we've already ran the buy side here once. We ran it again right off the open. And where is it untapped? It's resting right there. You throw another confluence in there, which is the opening range gap from yesterday. That's a good decent framework for a trade, as long as that's just, to me, if you're only looking at liquidity, it's okay. And as soon as you start throwing other confluences in there, then that's really good. Hopefully that makes sense. I mean, it's pretty simple in my eyes, but I know it can be difficult. So we'll see if we want to trade into this new week opening gap, or even we could say this previous new week opening gap and then the current, and fill in the remaining portion of the opening range gap. Now, at this point where we're at right now, you may be questioning, well, do I short it down here? Per my rules and what I've seen within the markets, I'm not going to short down here currently. There's situations where I could, if I do trust that price is going to just keep moving lower and leaving breakaway gaps, meaning it's going to leave, let's say, the sell side imbalance above its open, it's in a hurry to get somewhere, then yes, I could be shorting down here. But since we've made a new low, right, you're looking at basic market structure. You have a lower high, lower low, lower high. We've made a new low. I would like to see a retracement back inside of something where it puts me inside of a premium, right? Then I would be able to short. I would also be looking at a 5-minute time frame, possibly a 15-minute, and looking for another imbalance to form, right? So I'm looking at the clock, I'm looking at about 3 minutes left, or about 4. And if the 5-minute formed an inefficiency, let's say here at about 4 minutes on the closure, that's a good confluence, because then there's a nested inefficiency along with the 1 minute here that price could get into. So as far as, trying to trade something down here, this is where I could go into a 15-second chart, a 30-second chart. I could be willing to, I could trade this down here, but the probability of it working, it's just not in my favor. So I'm not going to do it. I'm going to lean, or at least draw the line on the sand and say, look, I'm going to wait for some type of retracement higher before I'm looking to sell it. And if it doesn't happen and it keeps trading off lower, then it is what it is, right? These are, again, emotions and thoughts, even if you're not actually describing them, but it's what's going inside of most traders' minds, is these type of thoughts. Like, well, what happens if it just leaves it? I'm not going to be able to be a part of it. Well, you have to make the non-negotiable rule and say, look, I'm going to trade this or I'm not going to trade this, based off of what my rules say and what my experience says. Let's annotate order flow, this up close candle. If this was to continuously keep pressing lower, this order block here would have to be respected, and we'd have to see an expansion lower away from it. You'd also be looking at this inefficiency as a breakaway gap, meaning that price will never return into this. Uh, 15-minute or 30-minute after news. What do you mean by that, guy? When you start looking for setups, I mean, it could be directly a couple minutes after the news event driver. It depends. I mean, preferably I give it a little bit of time, like a couple minutes, to see what price is doing. It is a situational approach. I mean, there's no I have to wait 15 minutes. If I see something directly after the news event driver and I see things are valid, I'll be willing to take the setup. JH, yes, I have 4 monitors. I'll show my setup. So I want you to observe, if you don't use a seconds chart, I would like you to observe the 15-second here. I'd like you to observe this imbalance here, and I'll talk about it. And also this wick. So we're going to probably run into this new week opening gap. What my thought process is right now is price is really trying to spool, meaning it's trying to get somewhere quickly. I'll explain why that is. So I don't expect any further really retracements here. If anything, we're going to dump into this new week opening gap. So this is where I'd be utilizing like a seconds chart, because on a minute chart, I don't see anything that's really valid. Yeah, Guy, I'll talk about it. I mean, I forget how difficult at times it is to, I wanted to sell in here. I'm a little bit distracted. I want to see on a seconds chart if we're willing to move away from this imbalance, and I'll talk about it, into the new week opening gap. I forget how many comments come through on YouTube. Price did respect the first FEG. Yeah, probably way up here it did. But again, if that's before a news event driver, I'm not going to be touching it. Now, if I had to talk about why this would be lower probability, right, is because we're shorting at a very deep discount since we made this new low. Since we made this new low, price could potentially return into a higher premium. That's what you're seeing here. Damn, is that loud? That I cannot deal with. Really, I'm trying to show a seconds chart annotation. Did it work? No. I'm really trying to show a seconds chart example. If in a very fast-paced movement market, which you'll see me do this year, on a seconds chart, if I'm anticipating that the 1 minute chart is not going to give me inefficiency or something I can execute off of, then the seconds chart is where I'd be utilizing it. So if you go out to the 1 minute, if this is moving at a decently fast pace, spooling towards something, then I will go into a seconds chart like 15 second, 30 second, and start utilizing that. As far as where we're at currently, since we've created the 5 minute inefficiency, we could possibly return into that. And what I don't have on here is this new week opening gap or previous. I guess that's 3. But I'd still like to see this potentially collapse into the new week opening gap and close that in. go over to the one that I'll put side by side here. Where is this opening range gap? There we are. So currently where we're at, I do believe we're going to get into this new week opening gap here. That's once we get into that, I would have to kind of reconsider where we're at, since once I reach a terminus or reach a basically destination on price, then I kind of have to sit still. It's already completed some objectives so far. And that's the issue, I'd say, with a seconds chart as far as like this entry here. The 1 minute is the parent, so as far as a stop loss per se, could be above the 1 minute order block. At this point, there just isn't anything in here for me to enter off of. I don't see a clear entry pattern, so we'll just see if what happens after we get in the week opening gap, if we do. Romer, no, I just still haven't got access to it. So there's a new week opening gap delivered. I mean, I got to email the dude today and see if he's got it set up or what. I mean, I messed up on some of my documents. I sent over apparently something not sufficient, so it's the reason why it's taking so damn long. If you look at a 15-second chart, we'll just annotate all of this so you can read order flow. Again, if price is extremely bearish or bullish, depending on what it is, and I'm looking at the 1 minute saying, I don't think there's going to be any sort of deep retracements, and it's in a very fast-paced moving order flow, then I'm trusting a seconds chart, or I'm reading it, rather than I'm looking at a 1 minute. If you look at the 15-second here, we've utilized this inefficiency. We dropped lower. If you look at a 1 minute, all of these up close candles are your bearish order blocks. So even here, this up close candle that just formed, that's another bearish order block. Now, since I've reached into what I would say a terminus, meaning like I've reached really a destination so far, I have to kind of reconsider. This is where I go out to higher time frame. Since I've gone into this new week opening gap, so I delivered into it and basically almost filled in the opening range gap from yesterday, I have to reconsider and see, do we want to trade into basically the next objective, which would be the sell side at like 21,475. If we do get into that today, I think there would be probably maybe some type of retracement before that happens. No, an order block doesn't have to be paired with an inefficiency. Can it help? Sure, but it doesn't have to. I guess I should make all these different, but so inside of that 1 minute order block, you have a 15-second, which is an inversion. Roamer, I mean, I don't really trade PM, so I don't really have any like strict rules around it. I mean, if I'm trading the PM session, that's because of the AM. If it was choppy and I still suspect there's going to be a run that day. I mean, macros are, to me, very easy to at least have rule sets around. Like, I'm going to be looking to execute around a macro during the PM session. The end of day macro is really well. I've taught that. Like, the end of day macro can be really nice. Last hour trading can be really nice. At the end of the day, when you come into rules, I mean, having a strict, I'm going to trade this amount of trades this day and I'm going to have this amount of risk. I mean, at the end of the day, that's all you can really do. We're risk managers. So if you can just say, look, I'm only doing this amount of risk today and I'm only taking this amount of trades. I mean, that is the easiest, simplest format you could have. That's your basic starting rules. I would like to see if this turns into a breaker here, a bullish. So we have a low, we have a high, a lower low, then this would turn into a bullish breaker if we close above it. It's not yet one. So if we closed above it, then I'd be looking at that idea. If you're just tuning in, I appreciate it if you'd like the video. Roamer here. I mean, I'm a little bit more flexible, I guess, with PM. So if I was to, let's say, create an idea right now, I'd potentially be looking at potentially longing it. Why? Because even though I'm overall looking for lower prices on higher time frame, I understand that price would like some type of retracement eventually into a premium before another sell-off. So I would like to see if we can get that before anything. Julianne, that was actually hilarious. Let's see how we're closing above this. So what does this become? That becomes a bullish breaker. What would I be seeking overall as a draw on liquidity? I'd be seeking this open sell sign imbalance above price. I'd be looking at this high here. So we have that 15-second there. Take a partial off at this high, and then we'll see if anything else wants to go higher than that, particularly this imbalance up here. GN, very nice. Now all this is paper trading because I still don't have access to my live account. So, I mean, it doesn't mean a whole lot to me. Would I be taking this on a live account? Yeah. I'm not gonna take something on paper trading I wouldn't on live. I mean, at least on a live stream. I have to email the dude today to see if it's set up by TradeAvate or not yet. It's a good question. What's the technical reason behind the stop loss? Inefficiencies are created by 3 candles, or fair value gaps are. So these 3 candles here are the, you have 1, 2, 3 candles that create this inefficiency. Stop loss always goes beneath the 3rd candle that creates the inefficiency. At least for me, that's what's worked for me. Again, this is all personalized experiences. So now there's a 1-minute inefficiency that formed here. So I'd like to see if that would be willing to respect it. Now we can come into this breaker. It's acceptable. Would I say this reaction so far is the greatest? No. Technically, we've IOFED'd this 5 minutes, so if it wants to really seek lower prices today, it could still utilize this IOFED, but I'm leaning on the idea of price returning into at least a deeper premium, meaning retracement higher before any sell-off, if it even did so today. So let's say this sell sign imbalance that's right there, 15-second. If it gets above that, inverts it, that'd be good. If you want to be real technical about the stop loss, and I didn't have the chance to do it, you could put it beneath this breaker on the 1 minute, but so-so. It's too large of a risk for me. Let's just say this isn't a real account. Let's just say I took 2 losses today, then that would be it for me. You're going to run into losses, and I'm happy it happened on whatever the second day. If you run into losses, let's just say 2, particularly 3 is like the most I'm ever going to do in a session. I've always stated that even from last year. You're going to run into losses. You're going to run into things that you take losses, whether it's 1, 2 in a session. If it's 3, that's really it for me. Beyond that, if I'm taking more than 3 trades in a session and they're all losing, not a good sign. That's where emotions get involved. You start doing dumb shit. So, curry fishball. When did ICT? Then why did ICT say that? I'm confused. I'm not sure what you're referring to. So if you look at the 5-minute, we IOFED'd this inefficiency here. So if you're wondering, well, why did, let's say, the bullish breaker, that potential model not work? Well, if price is really trying to seek lower prices, then it's going to utilize this inefficiency and spool off lower. So you can't sit here and, you know, even myself, you can't beat yourself up over certain models. We execute on something and it doesn't work. And then in hindsight, you're like, well, you know, this is why it worked. That's just part of the process, man. And I'm already waiting for comments of the same thing as last year. People that comment about losses. These are normal things that happen. Losses are normal. Even within the private group last year, people watched me doing it all the time. Losing. Then you go on winning streaks, then you lose. These things are normal. You have to understand that. You can't look at day-to-day processes and, you know, constantly observe yourself. You just have to look at the overall long-term vision view all the time. Right now is a good point. We're at the beginning of the year. When you look at an entire year, it's very good. It looks like we're going to travel into 21,475. That looks as if that's what's going to happen here. Jafar, yes sir. I would observe, yes, didn't make a lower low just yet. Chris B, I remember you. What's good, brother? Let's go out to the hourly chart and see we're seeing this massive expansion. Even the daily time frame, seeing that nice rejection away from the sell side bounce. And that's just going against the overall narrative. And that's the reason why that didn't play out. Am I aware of that before I took it? Yep. PUMEX Pume, what's good, brother? I remember you. Good to see you. Hope all is well. For me, 21,474 would be like the last kind of draw for me. Doesn't mean price can't go any lower today or do anything else. Of course not. But that for me would be like as far as I'd want to push something today. Doesn't mean I'm going to take another trade, but I'd like to see if we trade into that. And then beyond that, we'll just kind of see how the rest of the week carries through. But anytime you're looking at these large expansions, you're like, well, why is this happening? Well, where did price come from? we've came away from this daily sell side imbalance, which is here. We've came away from the 4-hour imbalance. We've came away from the 1-hour imbalance, which was here, and then we came away from another one. So anytime you're coming away from a higher time frame, parent premium, or parent inefficiency, whatever it may be, that's when you can expect these large expansions paired with the news event driver. Alright, I've sent my email. Chris, question, do you still watch his new content, or you found? Yeah, I don't watch any of his content. I think once you reach a certain point, which is, I would say, graduation, I don't think there's a particular need to. You find your own model, you find your own style, and it's not one model. I mean, you're going to have multiple models. You're going to have multiple things that you constantly are working with. It's a good beginner point to work with one model, but I don't think that you're limited to that. As a beginner student or somebody who's just beginning these concepts, I would only stick with one model. That's going to help you the most about development-wise. Let's see if, since we're inside of the new week opening gap, I'd like to see if we, I don't believe there's going to be any sort of retracement. I think we'd like to expand lower. JH, I mean, you saw me do that today. You saw me literally do that today. The bias is overall looking for lower prices. I still took along because there's days where there's going to be a retracement before another short or the continuation of the short happens. Again, that's just up to you if you're willing to risk that or not. You know, I used to be extremely strict on that, and I would miss out on a lot of moves or things. There's the sell side delivery. I'd miss out on a lot of moves where there's a potential retracement that I was expecting to happen. I would just sit out of it. And there's days where, like this, if I just stuck with that idea, if I'm not going to long it, then I would have protected myself from a loss. I mean, you could be very, very strict, very rigid on your rules, very, very rigid, rigid, following it to a T, or you can have a little bit more, which used to be me. You can have a little bit more loose, open rules and things like that, and it may not sound textbook 101 as far as trading, but when I allowed myself to have a little bit more flexibility and allow myself to say, okay, it's okay if I take a couple losses, because I understand all my setups usually go for way more than what I'm taking a loss for. And if I'm able to allow myself that, then I'm able to allow myself actually more profit. And I really adjusted that to this year when I was off of YouTube. So, I mean, if you see me take losses or multiple losses, to me that's normal, because once you see the setups that work, it's like, well, yeah, I'm okay with that. The setups that I take go for way more than any of the losses even that I risk. So we're really starting to see this expansion, I mean, rapidly. And again, the higher time frames are going to point to that idea. This daily time frame, what we talked about, basically from the weekly forecast, is playing out. So these large expansions that you're seeing is because of this daily time frame. Now, I don't know how far. I've already realistically reached into a point of interest that, or multiple points of interest that I'm very comfortable with. I mean, we've completely closed in yesterday's opening range gap. We've moved past the new week opening gap, and we moved into the sell side underneath it. So I kind of completed the objectives that I think are realistic for the day. Does that mean you can't move any lower? Of course not. We could really start to see even bigger drops today, but so far that's really what I'm comfortable with. Chris, yeah, I think that's a great question. Discretionary versus mechanical. I'm very discretionary. I mean, there's a you know, I'd say there's a sprinkle of mechanical in there, but discretionary is just experience in my simpler latent terms. It's just experience. Like, you can't just say, well, you know, experience means nothing. It means a whole lot. It's a lot of subconscious reading and a lot of experience based, you know, things that have happened to you that you know that are true, that you've seen with your own eyes. And the issue with discretionary is at times emotions get involved, and that's where it's hard to trust it. But if you're very tapped in emotionally wise, then I don't think there's anything wrong with discretionary. PUM, yeah, I know who Trader Kane is. I've seen him on my timeline. Seems like a very good trader. ICTs and Lumi trades. Yeah, I mean, unless I'm a chick, man, I ain't ever getting them in the stream. I'm just being honest here. What's your higher time frame draw on the weekly and daily? I'm just taking it day by day. I mean, overall, if I was to look at this, and again, it just goes into simpler narrative, excuse me, this would be, if you're looking at this dealing range high to low, then this low down here is what we should be looking for price to target overall. Why? Because that's where the dealing range low is at. So let's say today we close and this turns into a bearish order block. That'd be a really good sign. Hey, Vigo. Good to see you, brother. I haven't seen your name in a long time. Hope all is well. I have no idea. I mean, who's to really know? He may have been. I really don't care. It would be cool. I mean, that's my goal this year, is at least get him into the stream. We'll see, though. I know one way, which is putting myself into Robbins. Work on chess more. Those wondering about shorting currently or whatever. These are, I'm going to try my best to explain this. If price is moving in a very fast-paced movement or order flow, you have to be suspecting of where's the next draw on liquidity at, and why would it want to get there, and what time would it want to get there, and is there any retracements that could happen? Well, since we've made a brand new low in here, price could potentially return into the premium. Where's the premium? Well, this dealing range high to this low. Premium's up here, right? What's in that area? Well, this down close candle, I'm going to take away the new week opening gap. That's a bearish breaker there. Within that, you have these inefficiencies that's within a premium. So if I was to be shorting this today or looking for a short, I would be waiting for a retracement. If that never happens, I mean, it just kind of is what it is. I'm not willing to short down here. I'm gonna observe the macro, and then that'll probably be it for today's session. I really do hope I can get access to the live account today. Then I'm gonna be really tapped in. I just emailed them, so we'll see. If we go to the 15-minute, inefficiency here, and one underneath it, those would be the next potential draw on liquidities. I mean, there's one right there, but overall, I don't know if we're going to reach in Tuesday. Probably it could, but maybe tomorrow. Overall, these relative equal lows down here. Ty, it's a good question. Challenge accounts. I mean, I haven't done a challenge account in like, I don't know, 6-7 months. As far as challenge, I've always recommended over leverage on them. It may not be the best advice for some newer students, but if you have experience, you know what you're doing, you're not blowing capital, I would just over leverage them. I don't see the reason to spend a whole bunch of time on them, to be honest with you. But that's if you know what you're doing and you have the capital. I mean, if you don't, then take it serious. But if you have experience, you know what you're doing, I think you can over leverage on them. Unless you get into a live account and then just chill on it and do the proper risk management. Real money, ain't seen you in a minute. Hope all well. Did you get private lives? What do you mean by that? Good to see you. What do you mean by private lives? Oh, is that? Can you hear that? I have a dude that our parking garage and apartments underneath us. This dude has the loudest Mustang I've ever heard in my life. So that's ridiculous. I was wondering if the mic would pick up on that. My hat's annoying me. Oh, real money? Yeah, I did that. I mean, from March to, I mean, most of the people that were inside of it are in here, but from March to, or April to December this year, I was all private. I mean, so as we come into this macro, we'll see what this ends up doing here. So that's from 1050 to 1110. I do want to show an example. It's hard with sometimes live streams, but not my group that I was with knows what I do at times. I'll do one contract, depending on what I'm looking at. Like, let's say I'm trying to look for a reversal, or I'm suspecting the move that's going to happen. I will put basically a lure into the water. I want to see what price is doing. So I'll put one contract or maybe two, low leverage, and I want to see if the move starts moving. And if it starts moving, then I will pyramid into the position. That's something that I found last year that really was a good help for me. There's certain situations when I'll utilize that. If I'm looking for a reversal, I'm looking for the top of a move or a bottom of a move, I'm not going to put full leverage into it right away. I'm going to put just a little bit into it. As price starts moving, I'll start pyramiding into it. So if you ever see me do that, I kind of have to make that clear. JP, I can turn it up. How about now? Probably better now. I don't want to make it too loud, but it's because I moved my mic away from my face. Much better. What? Nobody let me know that. Come on now. You guys are supposed to be my technical team here. Ty, I'd recommend, if you're going to test out a new strategy, do it with paper trading. I'm just stating if you see me do that. I'm not saying you should be doing that. If you see me doing that, people are going to ask questions, so I might as well just put it out there. Let's see, I'm curious during this macro if we're going to get a retracement higher. Even though I'm bearish overall, I could still see a retracement happen. A really good indication would be closure above this imbalance here. But it doesn't need to, honestly. If you look at a 15-second chart, that would be your bearish or a bullish breaker. Excuse me. Technically speaking, it's technically this up close candle. It's always the highest up close candle. This inefficiency here. Overall, if I was too long this, even though I still see continuation on the higher time frame to lower prices, all I'd be looking at is price to return above this equilibrium, right? And get up inside of this premium. Buy side liquidity within that new week opening gap right there. There's a lot going on here, but this is a bearish breaker right there. Alex, I appreciate you. Thank you. I'm gonna execute on this inefficiency in here. Stop loss for me would be underneath this new week opening gap, and I want to see if we can dig up into this higher premium. Would I sell directly from that breaker? No. I would wait for a reaction on it, but I want to see if we can long it into it, and we'll just see. Market Whisperer, of course, brother. Have a good day. This is where I'm reducing the stop. Really, I just want to see if we can. This is going to be a short trade overall, meaning the duration of time probably. Depending on the delivery, I want to see if we can get inside of this imbalance here. I know there's a lot going on. Try and simplify it. Take this away. So again, the reason why I am longing this, and I'll cover it in more detail. It's hard to talk sometimes while I'm trying to focus. But this premium there, even though I'm bearish, I'm anticipating a retracement. New week opening gap 553. Yeah, this I think that's on this chart. There's a old new week opening gap right there within that imbalance. That's a good question, JH. It was really last year during like July. Seconds charts is I'm not always utilizing it. I just wanted to show the example of today. A lot of this is just trying to get people accustomed to like what I'm going to be doing this year. But yeah, seconds charts for me, I struggled a lot for like a few months trying to utilize it. It is something that I'm not only looking at a seconds chart, I'm always looking at every single time frame together. It's also the delivery of price, how fast it's moving, whether or not I'm going to use a seconds charts, or whether I'm going to be using a 1 minute, or whether I'm going to be using a 5 minute. All of those are important, man. You can't just only look at a seconds chart. But it definitely helped me read price a lot better. I think it gives you a lot better perspectives at times to be reading a seconds chart over just a 1 minute. That's a loud ding. Why is it so loud? I'm just going to take a partial there just for shits and giggles. Play sounds. I thought I turned it off. I can't stand that noise. So the reason why I'm like a little less certain of this is because the overall order flow to me is we may still seek lower prices. So, and we're inside of a premium and inside of this bearish breaker, and we've already reached these imbalances. So as far as like, I hate to say this, if I wasn't in a paper trade, I may have collapsed the trade, but I'm just kind of keeping on for demonstration purposes. Chris, yeah, most definitely. You have to take it with a grain of salt, man. It's you can get your ass handed to you on a seconds charts, man. You can make a lot of mistakes over trade. Like it was definitely a switch up when I started incorporating it, but you have to kind of. It's with any strategy or anything. I'm gonna probably get stopped at break even here, which is fine. If you incorporate any new strategy, you're going to encounter losses and mistakes and things like that. But if you're willing to endure it, you see the outcome of it, you see that there's, upside to it, then be willing to sit through it. There's that. I got to get this. Is there just no sound I can get? The sound is extremely annoying to me. So, overall, I just wanted to show that as a demonstration. Would I have taken that on a live account? Possibly, but I just wanted to show the example of even if you are bearish, even if you are looking for lower prices, vice versa, on a higher time frame or the overall order flow. If you're anticipating some type of retracement, it's still okay to trade against that. That's still okay. You just have to understand that your partial taking or your profit taking should be quicker. You should be understanding that, okay, I'm not in the on-side order flow, so I have to be very careful, watching price, watching what the reactions are. That's really what I was trying to demonstrate today, overall. It could be a lot more difficult because you're not on-side with order flow. And that's up to you. Do you want to just stick with one side, or are you able to trade both sides? Different window. Yeah, that's a good point. Thank you. Yeah, that's very true. Yep. You are correct. Thank you. Those sounds are obnoxious. Yeah, sir. I had that off on this monitor, but I guess if you have multiple monitors, then I guess that should solve the issue, though. Let me just see. Don't sell this or buy it. I'm just clicking a button. How is the button still... the sound's still there. Do I have 4 windows open? Hey, I'm correct. Look at this. It's got to be on this other monitor. It is. Hold on here, people. One more time. I just have to see. Boom. No noise. All right. Cool. I think it's gonna be it for today. I'm happy with it. Hopefully tomorrow I can get access to this live account, and then I'll be really trading for real. I really want to tap into that. So I think it's gonna be it for today. I'm happy with the stream. Hope you guys enjoyed. Day log tonight. I'll post some charts on Twitter, and we'll be back here tomorrow. It's gonna be Wednesday. I think we have a news event driver. Then Thursday, I don't know for certain if the market's closed or not, but I think it might be. I have to check again. And then Friday's NFP. So we'll see how the rest of this week plays out. Enjoy your day, everybody. Till then, peace out.